Hey, thank you for joining me here today. I'm Justin Martin. I'm an investment advisor and a long-term care specialist. To get started, I appreciate you having this conversation around long-term care. This is a topic we all love to avoid, but every family across the nation has a story to tell about long-term care. We all have that Grandpa Charles that had Alzheimer's and spent years and years in a nursing home. We have these stories to share, and today I want to have a brief discussion around long-term care and specifically the good, the bad, the ugly, and the amazing part of financing long-term care. Because frankly, this is a topic that is rapidly changing and has quickly changed in just the last couple of years, and you may not know it. So here's my promise. If you stick with me for a few minutes here, by the end, I'm going to share with you a much better way, more cost-effective way to finance long-term care. Okay, so I want to start out here today, and I want to talk about two questions. Okay, question number one. You may never need long-term care services. But if you did, how would that affect your family? Okay, think about that. If you ever did have to go into long-term care, how would that affect your family? Yes, emotionally it's going to take a toll, but financially too, that could dramatically affect them. And question number two here is, if you did need care, if you did have long-term care service needs, how will you pay for it? And typically we have three different options out there. Either through the government, long-term care insurance, or by self-funding. Okay. Now, most people take an opportunistic view at getting older, which is great, and we never want to believe that we're the one that's going to have to go into a long-term care needs. However, let's take a look at some quick statistics to paint the picture of the need for long-term care. Okay, so first of all, let's look at this. The odds of your house burning down is 3 out of 100. But I guarantee you have some type of homeowner's insurance and protection plan in place. What about if your car got totaled? You have an 18 out of 100 chance of your car at some point in your life being totaled. But I guarantee you have automobile insurance. Okay? Take a look at this statistic. 72 out of 100 people at some point in time will have some long-term care need. Now this is talking about the crowd that's 65 years and older that will have some type of a long-term care need, not just hospice care at the end of your life, but actual long-term care need. And I guarantee about half of you watching this video have never even looked at a quote on long-term care insurance. So it's very important that we become informed and we take a look at all of this. Okay, so here we are back to our questions. Now, if the average person, and this is the statistics nowadays, if the average person spends about 3.5 years in some type of a long-term care facility, the total bill for that service can be up to about $450,000. Okay, so how are we going to pay for that? How are we going to come up with $450,000? So let's look here again at the three different methods of paying for long-term care. If you're the type of person that has very little assets, you qualify as kind of a low net worth individual, you could probably qualify for Medicaid and have the government pay for your long-term care. And down at the bottom of the list, if you're very wealthy and you have a high net worth, you can usually self-fund or self-insure your long-term care without dramatically depleting your assets. And then, of course, there's the middle class. You have too many assets to move around, or you're not able to get rid of your assets to qualify for Medicaid because of the look back period. but you don't really have enough money to self-insure. You don't have enough to come up with that $450,000. Well, that is the purpose of looking at the possibility of a long-term care insurance policy. Remember, a nursing care facility could cost up to $10,000 per month. How are you going to come up with that amount of money for those that are in this middle class area? Okay. Well, if we take a look at how long-term care insurance has worked. In the past, when we talked about long-term care insurance, the conversation revolved around this traditional long-term care product. And that product was a use it or lose it type of insurance product. And frankly, it's very expensive, especially because if you don't use the policy, that's money lost, right? And a person with this kind of a policy can spend $3,000 to $5,000 per year paying premium payments for something they may never get a benefit from. And not only $3,000 to $5,000 per year, but that cost is going to continue to rise with the baby boomer generation. Okay. Now, due to some of these issues with rising costs, there's been a change in the financial and insurance industry around how long-term care insurance is offered. Okay, so let's jump into that. It is what is called asset-based long-term care insurance. As Thomas Edison said, if there's a better way to do it, find it. Okay, and that's exactly what's happening here. We're finding a better way to finance or fund long-term care. So hang on with me here. This is where it starts to get fun, okay? Now, let's say that this circle here represents your overall financial assets. Maybe you have some savings accounts and IRAs, real estate, alternative investments, CDs, gold. You know, you've got all of this wealth that you've saved up. Now, if you go into a long-term care situation, you have to now look at your assets and say, or your family has to look at your assets and say, okay, what portion of your assets is going to pay for long-term care? You've got to start coming up with $10,000 per month to pay for this, $450,000 over the long run. You know, how are you going to pay for that? What portion of your retirement savings is going to pay for long-term care? Well, this asset-based long-term care insurance is pretty slick. What happens is, in essence, you are taking money from one of your buckets of money. Okay, coming back here, you're taking this bucket of CDs or IRAs or 401ks, and you're basically moving that money from one pocket to the next pocket and putting it into this asset-based long-term care insurance. Okay, and what happens is you reposition that money into the long-term care policy, the asset-based long-term care policy, and then you get this list of benefits that come out of it. Number one, that money now becomes a death benefit amount. Okay, so if you moved over $150,000 and you put that into this asset-based long-term care policy, but you never used long-term care, fabulous. No one wants to have to use long-term care. And if you don't ever use it, great, that money gets paid out as a tax-free death benefit to your beneficiaries, to the next generation. Okay? Well, let's say you start this asset-based long-term care, and all of a sudden you say, hey, you know what, I want to cancel it out, or I want to withdraw the money out of it. Well, great. There's cash available. You pull that money out of it. It's your money. It's your assets. Pull it out. Okay? Again, we're just repositioning the money from one pocket to the next. It's still your money. But if you have it positioned in long-term care and you need the service, now you've got these long-term care payments that can come out to you. You can turn that $150,000 into $450,000 worth of long-term care payments. And not only that, it can be a joint policy. So now you've got $450,000 on you and $450,000 on your spouse, all out of that $150,000 account that you repositioned. Okay. So I want to remind you here that this is not so much a premium payment that you have to be paying into your policy all the time to set it up. We're simply moving your money into a position to create this guaranteed lifetime payment for long-term care. You're just moving money from one bucket to the next. Okay? With all of the amazing guarantees that we were showing here. Okay? So if you're looking at this and you're saying to yourself, hey, you know what? I've actually never seen this or never received some information or even a quote on this, let me know. Let's get you informed. Let's get you some numbers so you can analyze this and figure out if this is a good solution for you. Or even if you have any kind of long-term care insurance in place and you want to analyze it with me, let me know. Send over your statement. Let's take a look at it together, and I'll help pull it apart and show you the different nuances of it. And if it's a good policy, great, keep it. If not, let's look at different options. But be informed on what you actually have. Okay, so contact me, let me know. I'll put some links here at the bottom. You can go ahead and email me or call me or leave some comments here on this video, and I'll respond back on this video. But I want to thank you for joining with me here and taking a look at all of this, taking a look at this long-term care, because again, there's a better way to do it. It doesn't have to be the traditional use it or lose it type of a policy. And it doesn't have to be super expensive. It's just a repositioning of your assets. So thanks for taking time with me. Again, my name's Justin Martin, an investment advisor and a long-term care specialist. Thanks.